infamous Black Monday of 1987. And so what I did here is that I applied some really simple trend analysis and pattern analysis on this chart just to see how the market action was like back in 1987. Let me just show the drawing tools again. So here we have a very simple pivot. I'm using these three pivots to create a very simple pitchfork pattern, pitchfork trend line, which actually describes the price movement pretty well from this point. And you can see the price was contained within this trend range, and then eventually it broke out of it, then it came crash down, right? You can see that each bar is a daily bar, and this event happened very, very quickly. Once it broke out of that range, only took them 1, 2, 3, 4, 5, 6, 7, 8, 7 days to drop by almost 40%. So that basically completely, catch everyone in the stock market off guard back in 1980s, right? Because this thing happened so fast that, barely anybody got out. And this chart here, if you guys have seen Paul Tudor Jones documentary, which I highly recommend, he was there. There was a documentary about him. Trader, the documentary, right? So in this documentary, I highly recommend you guys go watch it. He actually predicted this in 1987. He actually started shorting the stock market around here, and he made almost $100 million in a day during the crash of the Black Monday of 1987. How did he do that? Because this chart, this 1987 chart, is very similar to 1929. So if you guys go back to, if you have the historical data, you can go back to 1929, just before the Great Depression, and saw the Black Tuesday crash, which is it's making the same pattern as 1987. So this pattern has happened once in 1929, and also happened once in 1987. And I was able to find other scenarios like this, similar patterns like this in the stock market. Usually kind of predicts that the market could be in trouble very soon. So let's take a look at what we have right now. Similar to 1987, similar to this consolidation area back in 1986. Back in 2015, we had a consolidation area, remember? You can see that here. This is also a daily time frame. This is a daily time frame, so this is exactly same time frame. I'm not comparing, apple versus orange here. You can see that we have this consolidation pattern, just like 1986, and we consolidated. We have these two double bottom. We have a double bottom. Then we came here. We came down here. That was the Brexit actually. You can see here in 1986, we had the similar kind of a correction here. Very interesting. And then we have another kind of a sideways correction. We had that in 2016. This was the election time, Trump election. I don't know what to say about these kind of a price pattern, but they look, almost identical, right? Look at that. And then the market took off, and then the market took off in 1980, early 1987, and this took off in early, late, 2016. Just getting to 2017, and we have this super strong rally. We have this super strong rally until this point. So let's take a look at how much this rally was back in 1987. This was a 46% rally, almost, right? We have here, this was a 48% rally. Interesting. And then we get down to this point right now. which is where we are right now. So here, do you see this? This is almost the exact same pattern. We have we touched a high point. We couldn't maintain it. We came down, which creates a B-C pattern. We have A, B, C correction. We have a kind of a double bottom here. We have a lower low. It made a low, then it made a lower low. Let me just switch this to, but our price velocity in 2018, this correction was much faster than 1987. I think the reason is, our stock market is way more efficient, and everyone has, everyone is using computer to trade. So when the market does go down, it goes down even faster than before, even though the size of the market is much, much bigger. But the reaction of the market is much, much faster in terms of when we're going the downside. When we're going the upside, we didn't have a lot of volatility. In 1987, you can see the early 1987, they had a volatility period where they had another consolidation area here. We didn't have that. We just went straight up. The reason is, in my opinion, is because all these short VIX products we have, right? We have a lot of short VIX products, and also we have a lot more algorithmic trading going on in the market, where the volatility is artificially being reduced. However, the volatility is being compressed. It's being reduced, artificially reduced. It doesn't mean the volatility is going to be gone. It's just like a spring, right? When you press the spring really hard, the spring is being pressed really hard. The spring contains a lot of energy, right? When the spring actually being released, that energy is going to be very explosive, in my opinion. And so what we have here is that we have this down, up, down pattern, which is a ABC, very classic ABC correction. Then we came back up in 1987. We have this 1, 2, 3, 4, 5 wave, basic Ella wave, right? You have 1, 2, 3, 4, 5 pattern that's going up. We have a 1, 2, 3, 4, 5, right? You see all these pivots going up, down, up, down. Let me put this into a 4-hour time frame so you guys can see this. We have a previous A, B, C. We have going up 1, 2, 3, 4, 5 to this kind of an interim lower low. We don't know what's going to happen after that. Lower low, right, on the other 5. And we also have this kind of trend line which you can draw by connecting the bottom, the first bottom, and the lower low, the high of the lower high, sorry about that. Then I use this line, I reflect it over here. I connect to this bottom and this, right? And look at this. Now, I think we came down again, just like this. We came down again. And we also broke the VWAP. So this is a volume weighted price average from the top, and this another volume weighted price average from the bottom. We have a volume weighted average from the top and volume weighted average from the bottom. You can see that this line penetrates through that volume weighted price average. Then the price tried to recover to the volume weighted price average from the bottom, but failed. Then the market actually broke down. You see here, we are actually right at here at the volume weighted price average. If the price is going up against the volume weighted price average from the bottom, if the recovery fails, if this recovery fails, I expect us to go down. And things could get very ugly from here, right? Just based on history, based on the 1987 chart, and based on the 1929 chart. It's very likely within March, within this current month, we could have a much, much bigger correction coming up. However, here, I'd like to say that the behavior is slightly different. You can see that here, when we came down, it's already reaching the lower kind of lower trend. So far, we have not reached that part yet. So this is a part that where it's kind of different. Maybe the price gonna come down again, then test it and come down. Maybe the pattern gonna be slightly different. But this current observation just tells me to kind of stay away from the kind of the long-term investment side of the market, right? I used to hold bunch of stocks for the long run, but recently I actually liquidated a lot of them. I want to see the market stabilize, and if the market doesn't make this, it doesn't fall apart, it should bounce off. It should maybe come down here, bounce off here, then continue the rise, and break. Instead of doing this, it should be bounce off here, then continue rising. If that happens, I'm gonna enter when it bounce off and continue to rise. But before that, I wouldn't put any long-term investment trade in this market until there's a clear support and until this pattern has been invalidated. So far, this pattern has not been invalidated, and it looks it's going like almost exactly like 9087 from here, from here, and drops the pattern just like exactly like 9087. Even the VWAP resistance line. So I don't. That's just my observation, and thank you guys for watching this. Hopefully that helps you to give you a better perspective of what's going on in the market, and be careful here out there. Be careful for during this period right now.